there is one word that is best fitted to describe Donald Trump's time in office so far in his second term. Uncertainty. Everything is uncertain. Is he going to put tariffs on this country or not? Is he going to take them off after he pledged to do it or not? Is he going to side with Russia or make a deal with Ukraine? Is he going to
invade Gaza?
Is he going to set up a Riviera in Gaza? Is he really going to try to annex Greenland or Canada? There is so much uncertainty. And I say this all to kind of set a backdrop for what my thesis for this video is, in that by creating that uncertainty, Donald Trump is sending us towards a recession in the U.S. This is the type of thing that I feel kind of like I need to say, I hope I'm wrong. I do hope I'm wrong. A recession is bad. But there are, what drives the U.S. economy and U.S. economic growth more than anything by far is our domestic consumption. Domestic consumption makes up over 2/3 of our economy. Other than that, government investment is a big part of it, government spending. And we lose points on our GDP by importing more than we export. Okay, so consumption has been the name of the game for American economic growth over the past 2 to 4 years, really since the end of COVID. And honestly, I'll put government deficit spending into there as well, because that has added a lot of liquidity into the economy and given people a lot more spending power than they otherwise would have had. But whatever the reasoning for it, the effect has been that our growth has been gangbusters.
We are by far the strongest G7 growing country in the world. We're only growth second to China for like an almost developing economy like China is. We are killing it.
Yes. Oh, I mean, we could be growing faster than China based on the unreliability of their statistics.
Yeah.
But so what's happening with Donald Trump as president is he's putting a ton of uncertainty into the system. And so what we had, COVID was a very uncertain time, right? Very like worst case scenario, everything sells off in equity markets. People are staying inside. Obviously, they are physically prevented from going out and consuming as much as they otherwise would be. But then after that, the response of both the Trump with the CARES Act and the Biden administrations with how much they subsidized the economy to recover, boosted people's spirits so much that the economy has been growing kind of like rapidly since then. But now all of that consumption that's been happening has been built off of confidence, right? And so this is the big part of the thesis. It's that consumption it's totally a perception game. It's are prices stable, and or even are prices stable, and if so, I can consume at a normal rate. Are prices increasing really fast? Obviously, something that did happen during the Biden administration in the Biden economy is inflation got super high. And yes, that does incentivize consumption because as prices are growing really fast, people think they need to buy before the prices rise even higher.
Yep.
But when you take the confidence away of the stability of prices, which arguably is happening even more because of how much tariffs are in the headlines. When you take confidence away in the growth of the economy, again, because of tariffs, and now because of all the uncertainty that's happening at the federal government level.
The massive reduction in spendings on Medicaid systems will drastically reduce the employment rates in a lot of rural areas.
Yes.
It will drastically decrease the buying power of rural America as they have to spend more of their out-of-pocket money on healthcare costs.
Not to mention they're directly injecting unemployment into the system by wiping out a ton of the government workforce, which, to be clear, makes up a very small portion of the actual federal government spending.
Oh, very small portion.
Very small portion. So what you're getting is you're creating this air of uncertainty to completely wipe out that solid foundation that the American consumer has been standing on for so long, which has provided the growth to this economy. And so now you're starting to get the signals that confidence is eroding. You had an above average or higher than expected inflation reading for the month of January. You have inflation expectation surveys coming out that are hitting the highest they've been since that inflation spike in 2022.
Unemployment expectation surveys are also growing to, I think, now at the highest point that it's been in a decade.
Yes, consumer confidence is at the lowest point it's been since COVID, since the pandemic. And so you're getting all of these. You have home sales, new home sales that are the lowest they've been in many years as well.
Average home buyers in their 50s right now.
Yes, and so you have created an environment where not only the consumer but also businesses, and they're interrelated, are no one wants to do anything. No one wants to make a move because no one knows what's happening. They have no idea what the rules of the game that they're playing by anymore is. And for whatever credit I might want to give, or anyone might want to give Trump for trying to bring back American manufacturing, to maintain our national security with things like tariffs, what he needed to not do was say that he was going to put 25% tariffs on Canada and Mexico, play it up to the very last minute, and then take the tariffs off the table.
Yes.
Because now you're not saying that companies should come back to the U.S. and invest here. All that you're saying is your word doesn't actually mean anything. So let's just scare everyone off from spending or making new investments. And we're just going to wait until hopefully it blows over.
I want to give an anecdote here.
Please.
I am a local politician in my town. And we had our budget meeting last night, and we did some zoning changes on one of our main streets where we wanted to see more construction. And over the last year, we haven't seen too many people and developers really come and request to build on that street. And so we went to the town administrator a couple months ago, and we're like, please tell us, like, talk to the developers. Why not? And the developers came back, and they said, we need a layout and a framework of how the process is going to work. I do not want to spend a ton of money on a study, a ton of money on an architect and a plan, and then for me to get told no and not know why. That is what Donald Trump is doing to the entire national economy.
That is such a perfect example, because this is a big reason why, like, we've done videos on housing as well. Yeah. Why housing struggles to get built in the U.S. is because all these local economies just have a review board that you can create this plan and stuff and present it, and then they can just be like, I don't really think it fits the vibe of the neighborhood, and they can nix it. And yeah, that's exactly what's happening now that we're off of a rules-based system and into a favors-based system for Trump and the oligarchs that sit around him. No one knows what they should be doing.
No.
And so they're just kind of treading water. And the one other thing I'll bring up. So let's start there. This is the consumption piece. If consumption starts to decline, then the U.S. goes into a recession. Yeah. It is such a big part of the economy, and its growth has absolutely has constituted it. The growth of the consumption base and government spending have in total completely constituted the growth of the U.S. economy over the past 4 years.
Completely, totally.
Entirely.
That's all it is.
So the other side of this is this is not what our show is about at all, but I think I need to bring up asset markets, equity markets, because a huge part of where that spending comes from as well is two places that both come from equity markets. One are specific capital gains. And so one of the things that have happened since COVID is the stock market has gone up enormously.
Ridiculous.
Enormously. And there was a little blip in like 2022 where it flattened out a little bit, but generally it has driven consumption because people have been able to sell their stocks and make a lot of money from them, and now they have more money to spend in the economy. Very basic. The other effect is more subtle, but it's a wealth effect. And I think the best example that I would want to use is look at China's economy and how it responded to its real estate bubble being let out. Because real estate is what Chinese consumers, Chinese people had looked at as a safe asset where they could grow their savings. But then it ended up being, they gained so much trust for it that it became a bubble. And it was a
tale as old as time.
Yes, the developers, it was almost a Ponzi scheme where they weren't even finishing the apartments. And so they got completely spooked. And now they've moved on to like the only thing that they can trust now are basically Chinese government bonds. The point is, if you deflate the asset that savers have been putting their money into so that they can feel better about their future and watch that money grow, you are removing this wealth effect and you are instead incentivizing people to hold on to their money, thinking that they need to save more of it because they can't be confident that it's going to grow steadily over time.
Yes.
And that becomes an issue when you have a massively inflated stock market on the basis of a story of AI, which, while it could be very real, it could also pop at any time once the market is already disposed to negative feelings because of all of the negative consumption data that has been coming out.
Yes, it is a confidence game
Yes.
above all else right now. I liked what you said about it was a rules-based order and now we're in a favors-based order. That was really good. And it's a really great way of describing the economic model we're shifting into.
Because when you're Elon Musk or even Tim Cook or now Jeff Bezos, which is another thing we have to talk about, and you're important enough to get a one-on-one meeting with the president and he tells you kind of exactly what he needs from you and you're like, all right, I can follow those rules and then I can make my investments. That's good and all, but that's always going to be a limited circle of people that touch a limited amount of the economy. And they do touch an outsized amount of the economy. Mm-hmm. Do not get me wrong. But those people were doing great already.
They're the oligarchs.
Those people didn't need it.
It is a cementation. It is a cementing of the oligarchy going on right now with this favors-based order.
Yes.
And I think that consumer confidence is not going to rebound anytime soon because what we see in the day-to-day agricultural price indices, our egg prices are still growing.
Mm-hmm.
Like we're going to have a hot inflation report for the month of February.
Yes.
Like that, it's going to happen.
Certainly.
And I don't know how we're not going to have a great jobs report for the month of February because we just laid off a ton of government workers.
That data might not even come through in time,
no.
which is almost more worrisome because if we get the hot inflation report without the bad jobs report, that's going to just send rates that much higher, tightening the conditions on the economy.
I totally agree with you.
Yeah, so we're at this point where I feel like now is a really good time to make this video because I feel like we are the Roadrunner cartoon or whatever, where he runs off the edge of the cliff and he has the moment where he hesitates and they just hold him there until he like looks around and he looks down and he falls. And we are off the cliff and we're still kind of riding the high of the good economy and the good markets that we've had, but we're starting to look around and the drop comes next.